Welcome back to another weekly market update here at Frontier Bank. My name is Brad Lupkus with Frontier Bank Wealth Management and Trust. This is coming to you a day late because of the bank holiday yesterday, but here's what the markets did last week. Last week, the U.S. markets were up across the board. This is mainly due to renewed optimism about a fiscal stimulus bill getting passed in Congress, but also due to some pretty encouraging news that we saw out of the U.S. service sector last month. Now, last month, the U.S. services sector hired more people than it laid off for the first time in the last 6 months. Now, the reason why this is such encouraging news is because the service sector in the United States makes up a huge portion of our economy. So think of jobs in sectors like your hospitality industries, your travel industries, financial services, places like that. And so the fact that we're starting to see more hiring and less laying off is obviously encouraging news that the economy is continuing to right itself and we're continuing to move in the right direction to get back to where we want to be. If we look at some of the overall numbers, market returns last week in the United States, the S&P 500 was up about 4%, which is its biggest weekly gain that we have seen since early July. That puts the S&P 500 up a little over 7.5% year to date. And then if we look at something called the Russell 2000, the Russell 2000 is an index that evaluates the performance of small companies here in the United States. And last week, the Russell 2000 was up a little over 6%, which is a huge number for a one-week return. Now, year to date, the Russell 2000 is still down about 0.8%, but considering the fact that it was down almost 40% back in March of this year is obviously really encouraging news that is getting back in the right direction too. If we look at some of the overseas markets, there's two different indexes that I want to look at in the overseas markets. The first one is what we call the EAFE index. That's EAFE. It stands for Europe, Asia, Australia, and then Far East. What the EAFE index does is it looks at the performance of companies that do business in developing countries, or developed countries, excuse me. So think of countries like the UK, France, Germany, Japan, Australia, places like that. Last week, the EAFE index was up a little over 3%. Now, it's still down about 6% for the year, but that again, too, is an index that was down much more earlier this year. And it's starting to right itself and hopefully get back into positive territory here before the end of the year. The second index that I want to look at is something called the Emerging Markets Index. Now, what the Emerging Markets Index evaluates is it looks at companies that do business in developing countries. So think of countries like China, India, Brazil, Korea, places like that. And last week, the Emerging Markets Index was up about 3.75%. which actually pushed that index into positive territory for the year at just under 3%. So all in all, it was a very good week for all retail investors. And hopefully we continue to see good news out of the economy. Once it's election time, things settle down with the volatility a little bit, and we can finish the year out strong. Thanks again for watching this week. Again, if anybody has any questions, please feel free to leave them below, and we will see you next week.